Johanna, welcome to Caijing.
Thank you very much.
We know that the Asia emerging market is also suffering from the financial crisis started in the U.S. What we see is that industry output, export growth, all collapsing in the past few months. Right. So what's happening, and what are really driving, the downturn in Asia emerging markets?
I think Asia for many decades now has been following a very export growth engine model. And I think, and the big beneficiary, the final demand for exports had always been very much concentrated in the US and in the developed world in general. And because of what's happened in the US in the financial crisis, that demand has essentially collapsed. And because within Asia, there's really not enough domestic demand to absorb a lot of the goods that are being produced. And you're seeing huge contractions in output on the back of that.
Some people also argue that maybe trade financing is another reason that caused the collapse. Do you agree with that?
I think that definitely was the case. After Lehman's collapse, I think there was definitely periods in which a lot of trade finance and ability to get letters of credit was just not normal. And that had probably exacerbated the blow. But I think that's not the whole story. I think it's also really a story of final demand collapse rather than just purely finance.
So do you see any sign of bottoming out? In the major market?
At this point, we've seen. I wouldn't say it's not. It's a little too early to say whether we've really seen a bottom, let alone the bottom. Right. But I think there's been some signs, for example, that in Korea. But I think for most countries, the negative year-on-year growth has still been very severe. Maybe not as severe as the previous month, but some of it is confounded by the holiday effect. So I think it's a very mixed picture. Some signs of a bottoming, but a little too early to tell.
So the economy may still take some time to bottom out. How about the currency? Will that be stabilized or ahead of the economic recovery or something like that?
I think the currency story is very interesting because certainly at the end of last year, post Lehman collapse, there was a huge risk aversion wave and a flight to dollar, flight to safety, and a lot of weakness all across Asian currencies. And certain currencies which are considered the riskier currency, like Korean won and IDR, got burned the most. But in general, there was a very bearish view, and a lot of positions, very bullish Asian FX positions, were reversed or unwound that exacerbated the weakness. But now we're starting to see an environment where there seems to be signs of things not as bad as they used to be. Some signs of very tentative signs of a bottoming. And people's expectations about the economic outcomes in Asia is now catching up with reality. So the negative surprises are not that severe. And meanwhile, you're getting a significant amount of policy intervention from the US, both on quantitative easing, on top of fiscal easing, that is weighing negatively on the dollar. So when you couple those policy intervention from the US with some signs of a stabilization in Asia, generally you are seeing some turns in dollar Asia. And again, for exports, I think we are across the board expecting export contractions everywhere. But having said that, we're also expecting import contraction in a lot of countries, most notably in Korea, where we're expecting a moving from deficit to surplus. We're also seeing current account improvements in India, in Thailand, in Philippines, maybe in Indonesia. And a lot of that is because you have the terms of trade effect, which help offset the export collapse story.
What's your view about the Chinese economy this year? Will China recover ahead of the rest of the world?
I think China is. I think we are relatively optimistic that China can grow between 7 to 8% this year. In fact, our forecast is 7.6%. And we think that the government is taking a lot of proactive steps in terms of fiscal stimulus. We've had a lot of credit expansion. And we're seeing that already in some of the data. We've had 3 consecutive months of improving PMI readings, very strong bank lending growth. So I think China can still grow at a relatively healthy pace. But having said that, I think China has to obviously change the structure of its economy and the drivers of its growth from being very export-driven to more domestic demand-driven. And that will be a challenging transition that we have to go through over the next number of years ahead of us. But I think in the near term, yes, I think China can still grow relatively better than a lot of the other countries.
Governor Zhou Xiaochuan from PBOC just proposed some kind of a new framework of the world currency. Ideally, there will be some new currencies that should be able to substitute the US dollar in order to stabilize the global economy. And plus, if the world currency is stable enough, then other emerging markets may not need to stock up that much FX reserve, right? So, what do you think about the idea?
I think it's a very interesting and very valid idea. I think in terms of reforming the international financial system. But however, I don't know if it's practical or implementable at this point in juncture. I think the agenda in the near term is to try to fix the problem as soon as possible, to find solutions that are implementable right away.